Hormuz ceasefire. Markets rally, risks remain. What just happened in Hormuz is not a resolution. It's a pause. Markets reacted fast. Oil dropped sharply. Equities rallied. But beneath that release, the system hasn't reset. What we're looking at is a 14-day window. Not stability, a temporary reprieve with unresolved risks still embedded. The ceasefire, brokered by Pakistan, does three things. First, it pauses direct US and Israeli strikes on Iran. Second, it allows what's being called safe passage through Hormuz. Third, it opens a diplomatic track, with talks set to continue. But the gaps are where the story sits. The US wants full, immediate reopening. Iran is offering controlled, conditional transit. There's no agreement on sanctions, no agreement on the nuclear file, and critically, Lebanon is not included. So yes, there's a deal, but it's narrow, conditional, and reversible. Oil markets didn't wait for clarity. Brent saw its sharpest one-day drop since the Gulf War. That's not normal volatility, that's positioning unwinding. But zoom out. Prices are still roughly 30% above pre-war levels. And the structural premium, the risk premium, is still there. So this isn't a reset. It's a correction from extreme stress. The market has priced out escalation, but it hasn't priced in stability. Equity markets moved in sync. Asia led the rally. Japan, Korea, tech names. US futures followed immediately. Classic relief trade. But the Gulf tells a different story. Dubai and Abu Dhabi have already lost tens of billions in market value. Saudi Arabia is holding, but just about. So what we're seeing is a bounce, not a recovery. Markets are reacting to the absence of bad news, not the presence of good news. The takeaway is simple. The ceasefire changed sentiment. It didn't change fundamentals.